accounting boffins, you with Ashraf Patel and the team. We're busy with cash budgets. The emphasis now is on the payments. So let's have a look at this here. As you can see, if you recall from our previous lesson, we did the cash budget, right? We sorted out the receipts in terms of the cash sale and the credit sale. Remember, just a quick recap, the credit sale was dependent or was needed to draw up your debtors collection schedule. Right, now we're looking at the payments. Obviously, your cash payments would just slot into your cash budget because it's your cash payment of merchandise that was purchased. Like your cash sale was a component that went straight into the cash budget, your cash payments under the payment section of your cash budgets will slot in. However, what happens now with the creditors' payments? Now think about this. If my debtors collection schedule was dependent on credit sales, my creditors' payment schedule will be dependent on credit purchases. So, important for the creditors' payment is your credit purchases. Okay? So once we have that sorted out, we can now move on. When it comes to our creditors, obviously, due process needs to be followed. Number one, what do? A business usually negotiates with its creditors on, one, how much time is allowed to pay back, and two, the amount owed to our creditors. Now, what do we normally use as a basis for working? Remember with debtors, we said we expect our debtors to settle their accounts within 30 days, right? Very often, what is negotiated with our creditors is a payment period of 60 days. Now the question is, why 30 from your debtors and 60 to your creditors? Very simple. You expect your debtors to pay you within 30 days, so you have the cash available to meet your obligations, and therefore the longer term you negotiate with your creditors, the better for you. However, you could get creditors that insist that you settle within 30 days as well, right? But that obviously will be entirely dependent on the question that we are dealing with. But ideally, what do we want? What we'd expect is debtors pay us in 30 days, and we settle our debts within 60 days with our creditors. Okay. Now, when you're preparing the cash budget, you must also calculate the payments to be made to your creditors, right? Like I alluded to earlier on, what's the most important component when you are working out your payments to your creditors? The most important component is your credit purchases. However, that credit purchases will also be dependent on your sales. Now you must be thinking, has Ashraf got his facts mixed up here? Why is he talking about sales? Remember, a business usually uses what we call base stock. Let me explain base stock to you so you have an idea of base stock. In a very simplified manner, if that is your trading stock account, if you start off with 100,000 at the beginning, you hope to end off with 100,000 for the next month. This is what we mean by base stock. Whatever you start off the month with, if you sold to the value of 70,000, as you can see here, then it means that you have to purchase 70,000 in order to maintain base stock. So the stock that you start off with at the beginning of the month is the stock you must start off the next month with. That's what we mean by base stock. So obviously, guys, you can clearly see that whatever you have sold is what you need to purchase. So therefore, the importance of understanding the steps in calculating the credit purchases figure. So when we are paying our creditors, like we drew up a debtors collection schedule when it came to the debtors, the receipts from our debtors, by the same token, when we're drawing up our creditors' payments, we need to draw up a creditors' payment schedule. Right? So you got it. Debtors collection, you needed your credit sales. Creditors payment, you need your credit purchases. But it's not just the credit purchases that you require. You will have to use the information that you are given in order to arrive or in order to calculate your credit purchases, and then you will be able to work out your payment to your creditors. So, if this is the question that we have, again, let's ascertain what information do we have. We are told that we have red traders and they are giving us the credit purchases. In other words, they've already given you the credit purchases figure, but don't expect that to happen in the exams. Why? Because generally, in the exams, you're not given the credit purchases as a straightforward figure. You are, in most cases, expected to calculate the credit purchases. And once you've calculated the credit purchases, you can then go on and do the creditor's payment schedule. But in this case here we have the information. There's my actual credit purchases for January, February, and March. And there's my budgeted for April and May. So once again, we have our credit purchases, meaning it's much easier to calculate since you have the credit purchases figure. Okay. You are told that 60% of the purchases are on credit, right? And your creditors are paid after 60 days. That means 2 months after the month of purchase. Okay? That's important. So if we look at our creditors schedule here, payment schedule, we need to ascertain firstly, in February, we purchased goods to the value of 52,000 Rand on credit. Remember, the credit purchases figure you want. Okay? In this case here, we're looking at the 52,000 Rand as the total figure of our purchases, right? But 60% of it is on credit, so you'll take 60% of the 52,000, right? And that will give you, if you take your calculator, and if you take 52,000 times your 60%, you get a figure of 31,200. So you can clearly see, if you bought in February, they told you, you pay 2 months after. So February, March, you're paying in April. How much are you paying in April? 31,200. Okay? Then you look at March, and once again, you find out that your total purchases is 60,000, right? 60% of that figure is on credit. Okay, so you'll take 60% of 60,000. We can do it as a straightforward calculation. It would be 36,000 Rand. Let's just check on the calculator if our figure is correct. So we say, take the 60,000 times your 60%, and there you go, 36,000 is correct. So once again, what do we know here? We can see that we took 60% of the 60,000, right? Gave me a figure of 36,000. When am I paying the creditor? 2 months after the month of purchase. So I purchased in March. I will not pay him in April or her in April. I'll pay the amount in May. There's my 36,000 that will be paid in May. So my total payments or my creditors payment schedule looks like this. This is the total payments that I will have to make for my budgeted period of April and May. Now once again, what's important in terms of our calculations? Firstly, look at the budget period. What period are you working for? You're working for the period April to May, right? Number two, which months will impact on April and May? Clearly you can see, if you had bought in January, you would pay February, March is your first payment. So that doesn't affect my budget period. But looking at February, does February impact on my budget period? Certainly it does. Why? You bought in February, right? You will only pay not in March, but in April. Therefore, you see February first payment due in April. Then you look at March. How will you've purchased in March. Will you pay in March? No. Will you pay in April? No. Will you pay in May? Yes. Why? Because that's the terms that you have negotiated with your creditors. Okay, so there's my March payment to be made in May. Clearly you then add up, and this is the total amount that you've drawn up from your creditors payment schedule. And definitely, how is this going to impact on my cash budget? Once again, notice under my cash payments, let's take the 65,000 Rand, which was my total purchases, right? Multiplied by 40%, because obviously if 60% was on credit, 40% has to be on cash. So therefore, you take your 65,000 times 40%. Here we go, 65,000 times my 40%. 65,000 times my 40%. And that gives me a figure of 26,000. Here you can see is my 26,000. There's my 26,000, which is my cash purchases. Now remember, once again, draw a distinction between total purchases, which is the cash component, which is the credit component. Cash component in the month of sale, so in April, there we go, we've got the 26,000. And obviously, if you look at the next one, which was your 70,000, 40% of 70,000 will give you your 28,000. That is, these two figures here, guys, are your cash purchases. Now, once again, how do we remember this? Cash purchases go directly into the cash budget. Obviously, you're going to show your calculations as to how you got those figures. But your payments to your creditors, these figures are coming from where? They are coming from your creditors' payment schedule. Can you see? 31,200. Let's see. There we go. 31,200. What was the next month? May. 36,000. Watch here. There's your 36,000. So once again, if this was being marked in the exams, this is marked. These marks here, the cash purchases, are accuracy marks because the calculation is made in the cash budget. However, your creditors, your payments to your creditors are figures that you are getting from something that you've done already. Remember, you've already drawn up the creditors payment schedule. And because you've drawn up the creditors payment schedule, you're just going to take those figures and transfer them into the main budget. As you can clearly see, with the 31,200 and the 36,000 are amounts that you've already calculated. Okay, so now, if we have to summarize this segment of our lesson, two things would affect your payments: your cash purchases and your payments to your creditors. Cash purchases would be that percentage of your total purchases that were made for cash. Your creditors your payments to your creditors will be dependent on your credit purchases. So take your purchases, break it up into two parts, cash and credit. Got it? Once you've ascertained that, the cash purchases, like you've seen, go straight into the cash budget, the percentage that was purchased for cash. But your payments to your creditors, you now look at the terms of your creditors. What have you agreed with your creditors? You have agreed that you will pay them 2 months after, and therefore you then make the calculation dependent on your calculations. So clearly you can see here that in order to determine your purchases, you will also have to know your sales. Why? Because based on your sales, you will calculate your cost of sales. And once you've ascertained your cost of sales, that will then determine how much goods you have to buy. Right? So I'm sure we've piqued your interest with regards to the creditors payment schedule. You want to know more? Take a quick break and we'll see you just now. Welcome back, accounting boffins. Right? We're busy with cash budgets. Which component of the cash budget? The creditors payment schedule. Right. Let's get into this question so that we understand exactly what we are doing. We have to use the information to prepare the creditors payment schedule of red traders. And what information do we have? Remember I said, in this case here, we are given the sales for October, November, and December, right? We are also told that the firm uses a markup of 25% in order to maintain a base stock consistent level. Remember we spoke about base stock? Just a quick recap. Base stock means you keep your stock consistent. Right. Now the first thing that you need to know here, guys, is how to calculate your cost of sales. Remember, we need our cost of sales to determine how much goods we're going to buy. Once we've ascertained that, that figure will then be broken up into cash purchases and credit purchases. Now, this often is a challenge for learners, and I'm going to show you an easy way to remember how to calculate the cost of sales. Here goes. Cost price is equal to 100, always, right? The cost is always equal to 100. Your markup, in this case here, is equal to 25%. Obviously, that's your variable. It will change from enterprise to enterprise. Some mark up by 25, others by 50, 33 and a third, whatever it may be. So that's your variable. It changes depending on the needs of that particular enterprise. So you add the two, cost price plus your markup is equal to your selling price of 125. So cost plus markup is equal to selling. Now, you are given the selling price. What do you want to calculate? The cost price. Look at your formula. The cost is 100. So whatever you want must always be on top. Not inside, on top. 100. Over what's given to you? The selling price. What's the ratio? What's the percentage? 125. Right? Times what? Times your actual selling price. So, you want an easy way to remember that, don't you? Here goes. Cost price on top, not inside, on top, over your selling price, which is 125, times your actual selling price, and you want to remember that? ASP Ashraf Patel. Easy, isn't it? So, in that way, you will always know how to calculate your cost price. Remember, you are given the selling price here of your sales figure for October. You're given the selling price for November, and you are given the selling price for December. You have to calculate the cost price. Okay, so we've sorted that one out. And you are told that all the purchases are made on credit, so that means whatever you've been buying to maintain base level stock, consistent levels of stock, is credit. There's no goods were bought for cash. Okay. Additional information, the owner is expected to take goods costing R1,000 each month for own use. Right? Remember again the acronym POP. What do we remember with the acronym POP? Whenever it says personal, owner, or private, when you see any one of those words, you remember that that is drawings. Right? That is drawings. Now, drawings is not necessarily only in terms of cash. Anything that the owner takes from the business, even it may be trading stock, is regarded as drawings. So any information that is given to you for a very important reason. And you'll see why I'm saying that just now. How are we paying our creditors? They are expected to be paid 20% in the month of purchase. That means if you bought in January, 20% will be paid in January. And the remainder, the balance is paid equally over 60 days, meaning depending on how you do your calculations. Firstly, what you do know is that 20% in the month of sale and the balance equally over 60 days. That means if you're paying 20%, you're left with 80%, so it would be 40-40 in the 2 months after the month of sale. So in other words, you're paying your creditors 20%, 40%, 40% to cover the 100% payment. Right. Obviously, this is just additional information for your credit sales, because sometimes, depending on the question, if the question had said credit sales constitutes 70% and they only give you the credit sale, you'll have to use the credit sale to determine your total sale. Look at the tricks we use as examiners, right? Very important. If you are given credit sales, then you have to convert the credit sales to total sales and then work out your cost of sales. So important, you need to determine the cost of sales on total sales. Right. So this is a grid that we have to complete. Right? We're given the months we're working for, October, November, and December. We start off by saying, firstly, let's take the information. We've got our sales figure for October, which is 70,000, right? We know that the markup on cost is 25%. So immediately, what did we say? Let's recap. 100 over 125 times 70,000 over 1. Let's do that calculation. And here we go. We take 100 times 70,000 divided by 125, and you're going to get an answer of 56,000. What is the 56,000, guys? The 56,000, as you will see here, there we go. There's my cost of sales of 56,000. So once again, important, you use your markup to determine your cost of sale. Your cost of sale is dependent on your total sales, right? Depending on the information that's given to you, if you are given total sales, not a problem. If you are given credit sales, convert it to total sales and then do your calculation. Right, the second calculation that we're going to do is the 75,000, and obviously on the 75,000, same procedure, 100 over 125 times 75,000 over 1 will give you a figure of 60,000, right? And then the third one, obviously, is your 90,000. Let's do the calculation so we can see. On 90,000, there goes, times 100, which is your cost price, divided by your selling price of 125. Okay, there we go, and your answer is 72,000. Let's check our answer there. Perfectly in order, 72,000. So what have we done? We've ascertained our cost of sale. Got it? There we go. We've got our cost of sales for October, for November, and December. Now remember what we said. Why do we need the cost of sale? Because the cost of sales will indicate to us how much stock we must replenish, how much stock must we buy. It's dependent on the cost of sale, right? I hope you understand that. So clearly you can see, when it comes to the creditor's payment schedule, important, cost of sale. Then, once you've ascertained the cost of sale, in this particular question, it's saying all purchases are on credit, but it may not necessarily be so. You may get percentages where you have to break up your cost of sales into cash purchases and credit purchases. But for our example, all purchases are on credit. Okay, so we've got that one there. In our additional information, we were told that the owner is expected to take goods costing 1,000 Rand each month for own use. Watch this here. In my trading stock account, right? I've got my cost of sales on the credit side. Obviously, when I'm selling goods, what's my double entry? A debit to cost of sales and a credit to my trading stock, as you can see there, right? We've calculated the cost of sales, but in addition to that, the owner is taking 1,000 Rand worth of stock every month. So clearly, if I remember correctly, our first month's calculation was 56,000. So let's do that, just to show you that the cost of sale was 56,000. We calculated it, but that was not the only stock leaving my business. Why? The owner was taking 1,000 Rand worth of stock, which was your drawings. So therefore, the total amount of stock that is leaving my business is 57,000. It's the cost of sales plus the drawings. Therefore, when I do my calculation, watch here, cost of sales plus the drawings. But be careful, only drawings of stock will impact on this calculation. If the owner withdraws cash, it has absolutely no bearing on this particular calculation. Why? Because if he's taking cash, he's not taking stock, so therefore it cannot affect the amount of stock that we need to buy. So clearly, guys, you need to look at your trading stock account. This one here. I think I drew it up for you. Let's find it. Yes. Here's your trading stock account. And you need to look at all the ways in which stock is leaving our business. Right? In this case here, because of sales, 56,000. Because of the owner took 1,000, the total is 57,000. Therefore, now you can clearly see that my total purchases will be my cost of sales plus my drawings. So I calculated this for you, the cost of sales for each month. We know there's 1,000 Rand worth of this thing in each of the months. Therefore, my credit purchases will look as follows. There's my 57,000. There's my 61,000. There's my 73,000. What was that all about? Add that plus that, 60,000 plus the 1,000, 72,000 plus the 1,000. This will now give me my credit purchases. Okay, now, all purchases are made on credit. So, everything credit, full amount. Creditors are expected to be paid as follows: 20% in the month of purchase, balanced equally over 60 days. Let's look at our calculations. You start off with the 57,000. First step, calculate your 20%. Let's do that. So we got our 57,000. 57,000 times my 20%. Okay? And that gives me a figure of 11,400. So there we go. There's my 11,400. There's my 11,400. Okay, now what do? Watch what I do now. I take my 57,000, right? Minus the 11,400 that will be paid in the month, in the same month, to give me a figure of 45,600. It's paid equally over the 2 months. Therefore, divide it by 2, and there you get a figure of 22,800. So here we go. There's my 22,800 over the 2 months. Right. The next one we do is our November one, 61,000. Step number 1, work out your 20%. So let's do that. We got our 61,000, which was my total purchases, times my 20% will give me my figure of 12,200. There's my 12,200. Now take your 61,000 minus 12,200, and it gives you that figure of 48,800. Divide by 2 will give you a figure of 24,400. Here's your 24,400. Remember, equally over 2 months, but my budget period ends in December. Okay? When I look at my December figure, it's the 73,000. Clearly you can see this will only be paid in December and the months after that. So therefore, what do we have here? Let's go and see what we have. We now have our completed schedule showing us all our purchases in terms of the credit purchases that we had. There's the October one, 11,400, November the 35,000, and December obviously the 14,600, which was the 20% of 73,000. Clearly added together, or not added together rather, but rather taken separately into my cash budget. So in my cash budget, when I'm doing my payments to creditors, these figures will appear, but like I said, they would be accepted figures in the cash budget because we've already done the calculations. Okay, so guys, that is the creditors payment schedule. Most important, cost of sales and any other ways in which stock has left our business. Add together because we're using base stock, then determine what we need to purchase. Right? When you come back, we're doing a very interesting and important component of budgets. So, you want to know more? Stay with us. See you in a jiffy. Welcome back, accounting boffins. Yes, we're dealing with cash budgets. We've dealt with, in previous lessons, we dealt with the debtors collection schedule. In today's lesson, our emphasis was the creditors payment schedule. However, that's done and dusted. We're moving on now to a very important consideration, and sometimes often overlooked by learners. And you will notice that in papers, especially in grade 12, and obviously it can appear across the spectrum in any accounting paper, the interpretation of a cash budget is of extreme importance. Right. Now, if we look at the following. Internal control. Firstly, before we even look at internal control as it relates to budgets, what is the purpose of internal control? The purpose of internal control is to safeguard the assets of a business. I'm going to repeat that because of its importance. The purpose of internal control is to safeguard the assets of the business. Okay, now, how does it relate to budgets? Watch. A good system of budgeting should ensure, 1, effective control over expenditure and prevent the business from overspending. Very important, because that is the ultimate idea of the budget. You've allocated a certain amount to be spent on a particular expense. Yes, within reason. If you are slightly over the budget or you've overspent the budget, watch the terminology I'm using. You've overspent the budget, meaning you've spent more than you allocated for, then definitely it needs some kind of inspection, some kind of looking into why did we do that. And if there's a good reason for it, no problem. But if there's abuse because of whatever reason, then definitely that needs to be investigated. And this is something that's applicable in our daily lives as well. That's why we say accounting is a life skill. When there's overspent on the budget and there's good reason, no problem. But if there's abuse or there's something untoward, then definitely it needs looking into and it needs action to be taken to correct the wrong. Remember, you have to prepare a realistic budget. When I say realistic, you need to be fair. You need to look at all the factors that could affect your budget. And looking into it, you then determine whether your budget is realistic or not. So at all times, try to make sure that you prepare a realistic budget. Also, that once you have prepared that budget, it is implemented. Like I said, it's one thing preparing a budget and leaving it on the shelf. No, the budget must be referred to on a continuous basis to see whether you are complying with what you set out to achieve. Remember, it is a plan that you have drawn up, okay? And it is very important for that plan to work is to continuously look at it to ensure that you are then meeting the requirements of what you have proposed or forecasted in your budget. What else should a good budgeting have in it? You should ensure that the budgeted expenditure is authorized and the policies of the business are adhered to. Extremely, extremely important. One, when you're making payments, ensure that there's proper authorization of those payments. That means people that have been put in charge of procurement are ensuring that there's an order for whatever is ordered, that there's a need for whatever is ordered, that we are buying it from the best possible supplier and not from a family member where we can get a kickback, okay? Because obviously that is tantamount to fraud, okay? And therefore, the budget should ensure that we follow policies. Remember, we have policies in our business, and we must follow those, we must adhere to those policies. Budget should be reviewed on a regular basis to ensure that the staff implementing it effectively and to identify financial problems early. Definitely. Look at your budget, revisit, review. Is it realistic? Yes, it's realistic. Is it not realistic? Why? What happened? Simple example. If you've budgeted for fuel as an expense in your business, and suddenly you notice there's a spike in the fuel prices, then certainly you need to revisit your budget, because those prices were worked out on fuel increases being marginal or inflation-linked prices. But suddenly there's this spike in the fuel prices which is out of your control. Then definitely review your budget. Go back and say, right, we need to adjust this fuel in terms of the fuel hikes that are taking place in our country. And therefore, you are reviewing your budget. Can you see the importance of reviewing your budget on a continuous basis? And also, the staff who are appointed to do that are doing it effectively. When you are doing your budgeting, it is important that the monitoring of payments according to the budget classification. What does this mean? It means that when you are making your payments, look at what has been allocated and for what it has been allocated. That means control, internal control. We can't overemphasize the importance of internal control. In any business, it is important to have internal control processes in place. Why? The purpose of internal control, like I alluded to early on, is to safeguard the assets. It's to prevent fraud from occurring in a business. It's to ensure there's no wastage. It's to ensure that expenditures are kept to what we have budgeted for. So all of this will fall within the ambit of internal control. Internal controls over our cash flows management should negotiate the best possible terms with suppliers. Absolutely important. People that are in charge of procuring, people in management, should negotiate with suppliers so that we get the best possible deals. Because at the end of the day, the better the deal for the business, the better for everybody. Everybody will benefit from it. Okay? When you're selecting the suppliers, negotiate the best possible settlement discounts for prompt payments. Yes, absolutely critical. When you are buying on credit, like I alluded to earlier on, generally we expect our debtors to pay us within 30 days. However, when we negotiate in terms with our creditors, we negotiate in such a way that we get the best possible terms. Because remember, the longer we have to settle our debts, the better for us. In terms of cash flow problems, it makes it easier on the business to collect our debt within 30 days and to pay within 60 days. Can you see? It gives you that leeway in terms of your cash outflow. When we're controlling, make sure that management of stock on hand so that cash is not tied up in too much inventory in the storerooms. Okay, yes, obviously, if certain merchandise is available at a good price and that merchandise is not something that will become obsolete or is not merchandise that will go out of fashion, it's something that there will always be a need for. Yes, we can buy because the price is good. However, take into consideration that you are tying up your cash in the stock. And if perchance something happens and you are unable to sell that stock, your cash will be tied up in an asset which you cannot convert into cash easily, because certainly there's a downturn in the economy. People are limiting their expenditure, and that particular product that you are selling now, there's no demand for it like there was before, so you're sitting with stock tied up in the form of cash in your warehouses. And that's not all. When you're sitting with excess amounts of stock, remember, it's the insurance of that stock which will also increase because the value of the stock is increased. That's not all. When you're looking at that stock, you're also looking at the possibility of theft. So the control over that stock increases. So yes, you have to find the optimal level of stock holding to ensure that you have a good control over the stock in our business. User-friendly ordering systems so that customers can easily buy goods. Very important. Make sure that you have systems in place where a customer does not leave your business without the goods that they require. So you have to strike that balance, right? You can't keep too much of stock, you can't keep too little stock. You need to ensure that you have systems in place. A particular item is selling out fast, order that on a more frequent basis, right? So that you do not lose the customer. Because once the customer walks out, that's the end. They're going to buy that item from another business and you've lost out on a potential sale. So make sure that you have systems in place which will ensure that our shelves are fully stocked and that we can service our customer base. Very important. Timely delivery of goods to customers to ensure early payment from them. If you are delivering the stock late to your customers, obviously they're going to feel that they can take the time to pay you as well. So in that way, you must ensure that you deliver your goods on a regular basis, timelessly, so that customers are then expected to pay for those goods on time as well. Targeted advertising and marketing to ensure that the business attracts the best and the most reliable customers. Certainly very important. Market yourself, right? And advertise your wares. Very often, on a lighter note, if you tell somebody this, and you tell them, it's pointless winking at somebody in the dark because they can't see you. By the same token, if the customers don't know what you have available, how you market yourself, how you advertise, will definitely impact on your sales. Remember what we said. The idea is to increase our sales and eventually make sure that we make maximum profit that we can make. Right? So therefore, remember something. Your marketing strategy, your advertising strategy. Just to give you an example. You have in your budget a figure for advertising. And you've budgeted 20,000 and you actually spent 5,000. Look at those two figures. One would be, you would be convinced to say, but it's fine. We budget, we save money, man. Come on. We budgeted 20, we only paid for our adverts 5,000 rand. Is that a good thing? Not necessarily. Why not? You will notice in this instance here, it's going to have a direct impact on your sales. You've budgeted 20,000. Use the 20,000 in your budget. Why? Because by advertising correctly, by marketing correctly, you're going to attract the customers, and you're going to attract the best consumers who would then be of benefit to our business. So yes, it is important that you look at the context of the situation when you are commenting on whether we have clearly, in this case here, we have underspent the budget, right? Another one that you can think of is repairs, right? We've budgeted 15,000 for repairs. We've only spent 8,000. One would say we've saved money because we budgeted so much. But what's the effect of not doing the repairs? Your motor vehicles may break down. You may be faced with bigger challenges in the long run. So when you're drawing up a budget, you've drawn it up for a specific purpose. Ensure to the best of your ability that you spend what you have budgeted for. Okay, make sure that we have control of our debtors. Make sure that our sales agreements are in place. And in that way, make sure that we follow up by sending reminders to our debtors on a continuous basis. Send out SMSs, WhatsApp messages, statements so that they pay timelessly. How do we encourage them to pay? Offer settlement discounts. If they don't pay, you charge interest on the overdue accounts. Make sure that your accounting records are up to date. Also, a very important aspect of internal control. Guys, we've emphasized internal control with regards to budgeting. Like I've alluded to earlier on, make sure that you are able to do exactly what is expected of you, and that is an interpretation and an analysis of a cash budget, debtors collection schedule, creditors payment schedule. Until the next time, reach for the stars. If you don't make it, definitely you will be a shining star in the horizon of South Africa. Until the next time, be good. Bye-bye.